Hey folks, welcome to the Rate Update with Dan Frio. I, of course, am Dan Frio. Today is, well, happy Valentine's Day. It is February 14th, 2022. So let's get on to it. What's the news out today? I'm trying my little technology behind the scenes, so if this messes up, I apologize. So let's try it. Oh, there we go. Okay, so we see the front page of the news right here. You can see Russian conflict is still in the news. If you haven't seen that, you've been under a rock. So I just want to give you on the forefront things that are moving the markets. Next thing is, what do we have? Fed Bullard, he's saying he sits on the Federal Reserve board, I'll put it that way, and he's voting that the federal funds rate get increased by 1 full percent by July. That's a pretty robust number. He's usually a defector a little bit. He usually doesn't go with the norm. I would say probably the majority of the Federal Reserve Board members are going to vote for a quarter basis point bump. I could be wrong. If we see a 50 basis point bump, it's probably going to be a little bit bad for the stock market and the bond market as well. So I'm just giving you guys some updates on what's coming up. One of the biggest things I want to talk about is right here. This is that area where it's like, a lot of people don't get this part. And when I've been saying it for a long time now, I say, foreclosures are a piece of this market. And it's one of the biggest pieces of why house values are up so high is because it is limiting the number of houses that go to market. Here's how that works, basically. It's doing this. It's saying, okay, forbearance was put in place about 2 years ago and said, you don't have to make a mortgage payment. But the biggest thing there is you couldn't be foreclosed on. So foreclosures basically in 2021 hit a record low like ever. And now those numbers are starting to come back a little robust there. So we're going to see right here, you're going to see that there in January, there's a total of 23,000 right here, U.S. properties that foreclosure was filed. An increase. Look at the crazy thing is this. This is an increase from the earlier month of 29%, 139% more than where we were last January. Then you go down here, there's 4,784 bank repossessions in January, up 57%. This is a 235% jump in foreclosures. Okay, so again, let me explain this to you. What happened was, and I keep saying this, and people still look at me like a deer in the headlights. About 6 months to a year from now, we're going to look back and saying, "Whoa, we were on the button there." Okay, so please, follow my guidance here. You don't have to 100%, but at least listen to why I'm explaining what I'm doing, because I always put the facts behind the reasoning behind it. So let's get now to the mortgage rates today. How did they open for today? So let's go this route. We have right here mortgage rates. They are open. 30-year fixed right now is 4.05. Yes, folks, we are over the 4 mark. And yes, the points are still in there. So if you looked at this, the rate would probably be at least 4 1/8. We're teetering on the 4 1/4 mark. I predicted 4% by the end of the month and 4.5 by June. We're getting there kind of fast. We're already past my 4% trigger. So let's go across. Let me explain this little bucket right here. Rates open at 4.05 with a quarter or a 0.4 in points. It's up 3 basis points, 0.03. Okay, guys, these are not my rates. To repeat it, they're not my rates. These are the national averages. Okay, to find out your customized rate, give us a call and I'm going to give you all my information at the end. So the 15-year fix is 3.31, up 2 basis points, still with a 0.4 in points. The FHA/VA is 3.75, up 0.13 or 13 basis points, basically a 0.25% in rate in a day. 0.25% in rates in 1 day. That's a substantial move. 30-year jumbos is 3.55, up 5 basis points. And the 5-year ARM is at 3.71, up 1 basis points. So again, the spread between here and here is widening. Now we're at 30 basis points. Again, when we hit a 50 basis point move or a difference, I'm going to start quoting the ARMs as well as the fixed when we quote you back. Now, again, a lot of people are going to say, Dan, I don't want an adjustable rate. I get it, but you have to learn the facts behind the equation. So let us, if you get a quote from us, which I hope you do, if you're looking to buy, build, refinance, anything in the mortgage realm, please let us explain what the adjustable rate mortgage, what the benefits and the cons are to you. And then you guys make a valid decision on what's going on there. So that being said, let's get to the rest of the data here. What is the MBS markets doing right now? It's down 30 basis points. Guys, this is a complete seesaw on what's going on. Let's see the live report, 47. There's a big lag right here. Let's refresh it. You're going to see this refresh to, no, this is, we're going to go with this number. This is completely a live report that I'm tagged into basically Wall Street on this one. Okay, so this is it. We are down 47. A complete seesaw of what's going on. So the good news is we had a lot of borrowers call us in on Thursday and Friday. Thursday was basically catastrophic with mortgage rates. Friday, we came back. I called back several people that day and said, hey, I know we were looking to lock you in at 3.75, but I got you 3.625, got you 3.5. Okay, we found dips for people. So does your mortgage advisor do that? Probably not. They're just logging you in, selling you on the rate that they can give you at that time, and that's it. They leave you up to chance at that point. So that's just another reason why you should be reaching out to us. Okay, so let's get on to the rest of the puzzle here. I'm going to go back to this, the market summary. I'm posting this. So guys, every morning I post something on my social media platforms. This is the bonds remain skittish over the geopolitical risks. It goes through, it gives you a short little video of a specific commentator updating us on the markets, where things are going, and then basically everything right here. Just go to my social media platforms. It's giving you the events for the week, the economic calendar, and all kind of stuff. Okay, so that's the best thing I can do is go to my social medias. One is, for example, Facebook. You're going to see everything posted there. Okay, even my Facebook Live, the rate update, my Twitter account. I'm working on getting, I have an Instagram account. I'm working on getting all that tagged with all this information as well. So last but not least, if you're looking for a mortgage, if we could be of any help to you, please reach out to us. Best way to do that is give us a call at 844-775-5626 or click here and schedule a meeting. You'll click that, it'll open up a calendar, pick the day and times it's available, or click the apply now button right here. It's going to probably take you about 10 minutes to complete the application. But the nice thing is when you're done, you basically fill out your entire application. Plus, based on the answers to the question you gave, you're going to upload all the important information that we need to get your loan approved. So that's my headlines for the day. Hope you appreciate it. If you do, please, all I ask you to do is give me a thumbs up. Subscribe down below, hit the bell. Every time I post a video, you get an alert. We're talking about today at the end of the day is why our foreclosures up over 200%. That's a pretty big number, but there might be a silver lining at the end of that for those out there that are looking to buy. So take care, guys. I'll see you later this afternoon. Bye-bye.